Etienne, that sounds like a big drop. 11 points to 41, it is.
Indeed, I mean 11 points, it's quite large by historical standards. But also a little bit concerning, David, is the fact that confidence dropped in 4 of the 5 sectors that we survey. And we saw almost 20 index point drops when it comes to retailers and manufacturers. And what is important there to remember, of course, is that retailers and manufacturing kind of propped up the economy in the first quarter. So if this strong decline in confidence in those 2 sectors is anything to go by, it perhaps point to slower growth in both those sectors and perhaps the broader economy as well.
It goes back, we were talking about towards the end of last year, almost a desperate optimism that the recovery would get underway.
Indeed.
Then in the first quarter saying, well, actually it is now, it looks better, but clearly fragile.
Clearly, I mean, that recovery wasn't sustained, and I think that is the concerning part of it. As I mentioned in the beginning, not only the extent of the decline, but the widespread decline in confidence. So clearly this is something to keep in mind when you think about where the economy is going over the next couple of quarters. And remember, we've already seen the economy losing a bit of momentum in the first quarter. So what I'm worried about is that this is perhaps an indication that the economy has lost a little bit of more.
Before we get back to some of the sectors in your index, we've had a 2.7% GDP growth target fixed. That's roughly where Pravin Gordhan revised his number down to. Might these numbers say that that actually is too optimistic?
Perhaps. I mean, from RMB's perspective, we very recently revised our numbers down, not only on account of what is happening here, but also just very broadly speaking and looking at the consumer, for example. It's pretty clear in today's results that the whole issue of slower nominal wage growth and slower growth in employment, a higher petrol price, food inflation still relatively high, all those things are starting to bite. There's no doubt about that. And we also have to keep in mind, when you think about the consumer and hence the broader economy, is that the last time that interest rates were cut was in, I think, November 2010. So consumers, they haven't benefited at all from any additional interest rate relief since then. So the consumer, in my opinion, is starting to show signs of fatigue, and probably what lies ahead is slower growth in consumer spending. We've already seen slower growth in the first quarter, bear that in mind. So I wouldn't be too surprised if it slows even down further.
And the little crumbs of comfort, like a lower petrol price because the oil price has dropped, not enough to offset all these things?
Not at all, not at all. I think with regards to the retail sector in particular, I mean, the index fell by almost 20 index points in the second quarter.
That's a huge drop in an index of 100.
It's huge, and it's across all retail types. So durable retailers selling semi-durable and non-durable goods, all experiencing one central theme in a way is reflected in the data, and that central theme is slower sales volumes, slower growth in sales volumes.
You also have a sentence here, you talk about the increase to an 11-year high in the percentage of manufacturers rating the political climate as a constraint on business. Now that's not what's going on in Europe or where the consumers are over-indebted.
That's domestic. I mean, so that's one factor on top of everything else. So if you're a CEO or MD at a company, clearly the issues in Europe is concerning, but over and above that there are homegrown specifics in a way. And there we ask the respondents a very simple question. Do you perceive the political climate as a constraint on your business? Yes or no? And the majority of the manufacturers, a strong majority, is saying yes to that particular question. So it's certainly something that they keeping in mind when they have to make decisions on employment or fixed investment for that matter.
I know you can't ask everything when you do these surveys. It'd be fascinating to know some of the detail of why they think the political climate is a constraint.
We don't have that detail. And as I say, it's also limited only to manufacturing, so not
also
the other sectors.
Interesting to go back, why the manufacturing sector particularly feels under duress from a political point of view. It'd be interesting to go back to the year 2001 and see what was causing it to be like that in an 11-year high, as you say. Looking at the new vehicles, now the other day we talked about new car sales up 20%. Now that appears to go against what you're talking about here.
Well, the index is still very high, bear in mind. So it came down a few points in the second quarter, but the level is still 65. So it does tell you that the majority of new vehicle dealers are still happy with prevailing business conditions. So it's certainly not a situation where confidence in that particular segment of the economy is collapsing. So it is still relatively high.
Then building contractors, we're looking at a very low 31, down to 24.
Exactly. Now, that's a kind of a level that prevailed or was sustained for about 2 to 3 years, I mean the low 20s. It's concerning. It tells us that that particular sector, in this regard, we're talking about building contractors. To the extent that that's a reflection of what's going on in the residential and the non-residential part of the economy, there's very little action. If anything, it is a very slow, protracted recovery in the building construction industry.
Also, signals coming from that sector are not good at the moment. We've had Sanyati, a listed company, filing for business rescue because 3 provincial governments haven't paid it for building roads.
There's no doubt that that will weigh on confidence. And, you know, actions like that on the part of the government is certainly not helping that industry at all. And obviously, when a company like Sanyati goes under, people lose their jobs. I mean, how is that helping the
It also discourages people from entering into contracts.
Exactly.
And the point has been made, particularly the construction sector, we've got good companies that can find work elsewhere, and they'll go.
And exactly, you know, if it's exactly right. If they're not going to do the work here, they're certainly going to find opportunities elsewhere, as they are doing in Latin America, in Africa, and so on and so forth, at the expense of job creation, investment in SA. A pity.
Saki, I'm not sure if you're in opposition to them when you do these surveys, but they also have a business confidence index, and I can't remember when last they came out on the same day, but their one obviously differently configured, but they declined by 1.5 index points from 90 to 92.8 from 94.3.
I'm not so in tune with the methodology and how they do their survey.
Well, they talk about a conspicuous deterioration in the business mood.
Oh,
and their numbers work differently, but that's what it's confirming is what you've just said.
Very consistent with our own sets of results. So if the 2 indices and survey results are showing the same thing, surely we should take note.
And then it talks about the lack of alignment across economic policy positions. Which
that relates to some of the political concerns that are being, you know, it's revealed in our survey results.
Yeah. Let's go back to that political climate. Just as it can be so low for first time in 11 years, it's got to that depth. A substantial change in the political climate, a dramatic gesture, something that is announced, could also dramatically improve confidence.
Exactly right. It's certainly something that CEOs and MDs, they watch it very, very carefully. Obviously, if they get a hint that you know, the president is selling a vision, a long-term plan for South Africa, and if that coincides with consistency in economic policy, providing more answers than questions on the political front, that will all help the business mood. And ultimately, David, if CEOs feel optimistic about their business, feel optimistic about the future of the economy, they will do what comes naturally.
They will invest.
They will invest and they will employ people. And that is how the economy gets momentum. So the political climate, very important, together with a lot of other stuff, obviously. That's quite important. So far, in the second quarter in particular, most CEOs, at least those that participate in our survey, they feel downbeat. So the outlook for the economy and for fixed investment, private sector fixed investment in particular, is not that rosy.
That was Ettienne le Roux, Chief Economist at RMB.